Aloha and welcome to Java. Thank you kindly for joining me. It is September 22nd, 2024, and it is Sunday. So hopefully you're enjoying a bit of your weekend. We'll take a look at the week ahead in the markets as well as the surrounding factors that are affecting it. Now, after last week and the major announcement with the rate cuts, this week will feel a bit like a decompression in more ways than one. We've got a bit of things to look at. So let's get started with the calendar. Now, with the calendar this week, we're starting off with the PMIs. And these are the manufacturing and services inflation, basically. These indicators will give an insight into economic activity, and these can also influence market sentiment. So Tuesday, we've got consumer confidence. And on Wednesday, we're getting new home sales and crude oil inventories. Now, the crude oil inventories could affect energy markets, their developments, and have an impact on energy stocks. And I'll be speaking about these a little bit more later. So, Thursday, we've got durable goods, the GDP numbers, and the initial jobless claims. Now, after these, we've got Fed Chair Powell speaking. So, if any of these throw off the market too much because they're all pre-market, he can manage it back to where it needs to be. Now, along with Fed Chair Powell, I'd like to mention we've also got the plunge protection team on watch, as well as a couple of other factors in case this market begins to fall too rapidly and too far. Now, on Friday, we're getting core PCE price index, and this holds less weight than it used to because the Fed now has already done cuts and announced what they're doing forward as far as further cuts. So with this, we will also be keeping an eye on that GDP growth. Now, this is closely watched for any turns of an economic slowdown. However, you have to look at it dissected because the bulk of it now is war spending and going to the production of bombs, ammunition, and weaponry that is being shipped overseas to perpetuate these wars. So with this, I'd like to just mention the earnings calendar that we've got. Tuesday, right before the new home sales, we're getting KB Homes earnings, and we will also get Micron on Wednesday and Costco on Thursday, as well as a couple of other earners, but relatively light on the earnings side. So let's take a look at our risk factors. Basically, still showing in greed territory, we've got markets rising, more retail investors piling in. The MMRI's right at about 234 right now, 234.2. Now, with this, the market rose quite a bit. Gold hit an all-time high, and the markets ended much higher, almost at all-time highs as well. Now, with this, we had the relative strength of the dollar and the 10-year yield both dropped quite a bit. Now, these gave room for those stocks to run. They have hit a support, and I believe these two look like they're going to rise, at least temporarily. Now, when these two rise, they do weaken, put pressure on stocks and other assets. So we'll be keeping an eye on that because it looks like there is a bit of resistance for stocks at the moment, as well as precious metals before they recover more. Now, we do still have inflation in play. So basically, right now, it's a buy the dip market. Unless there are major changes. So we're watching the levels because there is a lot of underlying weakness still. So could fall out at any rate. We'll look at cryptocurrencies. They were above 63,000 and they're beginning to pull back a bit. Now, cryptocurrencies do not close for the weekend, so they've still got movement going on. And we can look forward to these kind of like the futures as far as the tech sector, as well as also safety plays, because they do play a bit of that as well. Now, sentiment moving forward is that we have basically averted the crisis. They're cancelling out any chances of a recession, which is not true. In the longer run, it is only delayed it. So we're looking at the timing of these rate cuts how deep they were, and the motivation to do these basically to me is suspect. Now, for the longest time, they were pricing in quarter point rate cut. And at the last minute, within this last week, then it moved to the half point, which is what they did. Now, on top of this, Powell was saying that there is no major underlying factors saying that things had changed, yet he changed his position on this. So it doesn't quite equal what he is doing. His action does not equal what he is saying. So with this, we've got definitely more inflation coming until job losses increase in what Janet Yellen is calling a meaningfully or in a meaningful way. What does this mean in reality? This means that because of the easy money, all of the stocks, all of the inflation, everything will rise in price, including real estate, all assets across the board, until enough people lose their jobs that they no longer can spend on any of these items. And once they cannot spend on any of these, it will bring the price down as demand is crushed. So, more job losses coming as companies can no longer afford the inflation as it starts to get out of hand again. Now, with this, I want to switch over to different gearing. Again, in the news is Walmart. Now, we know they're already using dynamic pricing with their digital price labeling. Now they're also using real-time payments, and this says it's to battle credit cards. Well, a portion of that is true because the settlement costs are lower for them, but the larger issue here is they are moving to cryptocurrencies, digital currencies, and they will probably be one of the first ones ready to use central bank digital currency. Now, when you look at adoption, they need large corporations in order to play along. And we know that all of these large corporations have been in closed door meetings with the CEOs for some time now. So with this, we've also got SEC approving options for Blackrock spot Bitcoin ETF. Now, this signals major flags on two fronts. The first is that options are leveraged positions. And leveraged positions are bad for two reasons. First off, it can truly manipulate the price of the underlying asset without actually trading any of the underlying asset. So this is a covert bid to control the price of Bitcoin through Blackrock. The second part of this is that the major leverage positions, as well as options, are basically responsible for the major crashes that have happened in the past because there is not enough of the asset underlying all of these paper derivatives that are on top. Now, this story is about Bitcoin ETF, not the asset Bitcoin. However, it is the same thing going on with silver right now. The asset itself being manipulated in price with the paper, and one day that will all come crashing down as it does basically recorrelate itself. Now, I've got another basically inline story with this, and it's about the IMF, International Monetary Fund, successfully talking about successful CBDC, central bank digital currency adoption, will require proactive strategic policy and design choices that benefit end users and intermediaries. So here you go. Walmart stepping in will fill that for them. Okay, we're going to slip back into what I was speaking about with that leverage that they're doing with the options. And this is across the board. But the world economy faces pressure similar to 1920 slump. This is coming straight from Christine Lagarde, the ECB president, European Central Bank president. So she is basically now highlighting parallels between the two eras and not taking responsibility for the fact that she's one of the major players that brought this in the first place. Okay, with this, I'm going to stick with the economy and speak about GM right now. They are planning layoffs. 2/3 of their workers at the Kansas factory. Okay, so this plays right into what I was saying. More unemployment. As this increases, this is what's going to bring about the reverse of inflation into the deflationary phase, as no one can afford anything. They're not the only ones. We've got Southwest Airlines warning of what they're calling quote unquote difficult decisions to restore profits. Now, their CEO came out and basically apologized to all of the employees that this was about to affect, but didn't go as far as saying who it would affect or how badly. So we've also got FedEx. They plummeted with their bad news. And basically, when you go into shipping, that is major component of basically the economy, the real economy. If nobody's shipping things, no goods moving around, and it's because of not purchasing. And this is basically another sign of recession. Now, with this, I've got a couple of other stories I wanted to speak about. Energy, but this in particular is 3 Mile Island and nuclear energy. Now, the artificial intelligence boom may get 3 Mile Island a new life. Basically, Microsoft putting a bid in to purchase this from the old owner. Now, Constellation Energy, who was the old owner, basically 5 years after Exelon shut down the plant, they were saying that they were losing money, and Pennsylvania lawmakers had refused to subsidize it. So stepping in, Microsoft. And then on the boots and tail of this, we've got Amazon also going nuclear. And they're hiring plans that talking about the company may be looking at nuclear power as well to power their artificial intelligence. Okay, a couple of things before I end this. We've got, this is so unfortunate, but Putin saying that basically the endorsement of Kamala for the president was a joke. This is coming from the Russian foreign minister and basically calling out the truth. And you've got to read the article if you can. Now, I know that certain areas, in particular the UK, locked out from being able to read the truth as the RT has been banned across, but basically talks about the deep state, that they are really in control and have been for some time, and that they are under no illusion that regardless of who wins the presidency, that things will change. So with that, we'll talk about all of the war that is going on, our bankers' wars. These will continue. We've got a European country moving to bring back conscription. Now, this is Serbia. They abolished this over 14 years ago. And while Serbia is not a member of NATO, they basically maintain working relations with the US-led bloc of NATO, despite NATO bombing them back during the insurgency in Kosovo. Now, I've got personal ties back with Kosovo, but that's a separate issue. So we've got officials in Belgrade basically stressing that they're going to maintain military neutrality in the face of the Ukraine conflict, and that tensions between NATO and Russia. Now, they also vowed not to abandon the historically friendly ties with Russia and refused to take part in the sanctions on Moscow. So they are basically placing themselves as a bridge, kind of like Turkey has between the two. They're not choosing sides, although they are still keeping basically a little bit deeper historical Russian ties. Now we've got Elon Musk also starting to comply with Brazilian court orders. Unfortunate, kind of rolling over. He's starting to suspend accounts on the X platform because these accounts did support the former, basically, alternate choice Bolsonaro. So since Bolsonaro did not win, and they are speaking against the current president that won, basically is beginning to rip all those accounts. So is there any freedom of speech in these? You can judge for yourself. What are we going to do to preserve freedom? I have posted a couple of events that are going on. So with this, you can reach us either on X or Discord. I've left all my links in the description if you would like to see those. And I would wish you wonderful rest of your weekend and a green week ahead. Until I see you again, my friends, stay free.